When I saw these blowout employment numbers this morning, best in 50 years, 266,000 jobs created, benign inflation, I had two realizations. One, everything Harvard taught me about economics was wrong. And two, the trade war with China, it's extremely winnable. Let's talk economics. When I studied economics at Harvard back in the 70s, I was told that you simply can't have great job growth with mild inflation. The conventional wisdom back then was that rapid job growth would fan the flames of inflation, which would then cause the Fed to raise interest rates, possibly sending us into a recession. Now, that whole model is hopelessly out of date. Actually, it's been that way for decades. But maybe somebody forgot to tell Fed Chief Jay Powell, because a year ago he dusted off that ancient economics playbook and decided to preemptively crush inflation by calling for a series of lockstep rate hikes. In reality, there was no inflation, but Powell assumed it was the inevitable consequence of a strong job market. That was wrong. Fortunately, the members of the Fed finally seem to be getting it into their thick skulls that it's not the 70s anymore. And they're making much smarter policy decisions these days. And, man, if we're experiencing this kind of growth without inflation, that means President Trump has a ton of flexibility when it comes to the trade negotiations with China. That's why tonight I am saying I think you should just walk away. Just walk away from the table. Proceed with the planned tariff hikes in a week and a half and wait for the Chinese government to become less intransigent or until the elections in 2020 or both. The trade war, it's really hurting China. But based on this employment report, it's clearly not hurting us, at least not badly enough to put a dent in these fabulous job numbers. We might as well take our time and get the best possible deal that you can get. What makes me so confident? Because while our economy is obviously in great shape, despite the dire warnings from economists who told us that tariffs are always bad for business, the China economy, well, that feels like it's in trouble to me. We're starting to get declarations out of the Chinese government about how people shouldn't worry about financial risk. Hey, you know what? If there was really no financial risk, they wouldn't say anything. Honestly, it reminds me of what our government sounded like back in 2008. Now, I know Larry Kudlow, the president's chief economic advisor, and my former Kudlow and Cramer co-host, says that the trade talks are intense. But every time we get close to a deal, China tries to move the goalposts and the negotiations blow up. I say fine. This quarter, we have heard from so many American companies right on this show that have talked about mitigating the tariffs by moving their manufacturing to other countries. Why not let it play out? Whether you love Trump or you hate Trump, with these job numbers, time is on his side. As the Chinese economy deteriorates, I think they'll be forced to make more and more concessions to reach a deal. We're not just talking about soybean purchases here anymore. China will have to start actually enforcing intellectual property law. They'll have to stop dumping government-subsidized goods on our market. They'll have to crack down on illegal fentanyl that is killing our people. And they'll have to stop hacking our computers, or at least be more subtle about it. Only when China's ready to negotiate on those points can the talks begin in earnest. Right now, we're so far from where we need to be that the president might as well walk away from the table. I think that may be the only way to get a decent trade deal done. It costs the United States very little to wait. It costs China a lot. If the Chinese government wants to drag this out, that, my friends, is on them. Carol in New York. Carol.
Hey, Jim, I recently bought a small position in PAAS. I already have a solid position in gold, and they're all down today. So moving forward, how do you see today's jobs report impacting those stocks, and is it worthwhile having a position in silver at all, or is my money better served continuing to build gold?
Well, you are in the best silver company with Pan American, but I am not a silver believer. It's got too many industrial uses. I'm a gold believer strictly as insurance, and Pan American does not give you the insurance that you want. But I am glad, Carol, that you already have a gold position, so I'm not sweating the program. All right, I know I'm really out there on this, but I think it is time to stop going for a tie and go for a win in the trade talks with China. So walk away from the table, Mr. President, unless China starts playing fair. Much more Mad Money, including my exclusive with the CEO of Grocery Outlet. After a sell-off this summer, is it time to add the company to your cart? Then it's genetic testing company taking DNA tests to a whole new level. I'm sitting down with the CEO of a company you probably never heard of called Natera. It is so amazing. And all your calls, rapid fire in tonight's edition of the Lightning Round. So stick with Cramer.
Monday, kick off the trading day with Squawk on the Street. Live from Post 9 at the NYSE.
That's where it happened when we first heard about it. Lack of contouring. Contouring suddenly became something people weren't doing. Because I remember that.
It all starts at 9 a.m. Eastern. Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.